Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday, last day of August edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis. They got a good show for you folks today. We're going to be talking about a fat finger this morning in TEVA. Food stocks are getting hit hard. We have some Campbell's Soup numbers. We have some Costco numbers to discuss. We've got some earnings still as well. Box, 5, CTRP, Workday, L Brands all reporting yesterday after the bell. So we're going to get to all that and more. Our guest today will be at 8:35. That is Arthur Hill. He is a senior technical analyst at stockcharts.com. And today's show is also brought to you by Chaikin Analytics, winner of the 2017 Benzinga FinTech Award for Best Trading Platform, Idea Platform, Tool, or App. The centerpiece of Chaikin Analytics is the Chaikin Power Gauge, a stock rating that gives you a directional edge using a proven algorithm that uniquely combines fundamental data with technical factors and makes it all simple to understand. I'm putting a link right now in the chat. That link is to a couple of webinars that Mark Chaikin is hosting today. There's one at 4:15 and another at 8. The one at 4:15 is Intro to Options. The one at 8 is an Advanced Options webinar. This is a webinar with Mark Chaikin and 2 other options experts. So to go to that, you can click on the link in the chat that I just put in there, or you can go to ChaikinAnalytics.com. It's Chaikin, ChaiKin, analytics.com to learn more about that. Joel, what's up with the markets?
And the markets are up. S&P's trading up 4.5 points, 24.60 and a quarter. That opening tick of 55 and a quarter, 2 ticks from the low of the day. We got up to 24.65. We're looking at our 10-day high at 24.68.50. Crude oil market hanging out here at 46.11. That's up 15 cents. We did have a dip into the 45 handle. Let's look at the daily chart in the crude oil market. I think that it's a new low for the move there at 45.58. So we'll see if we get back down there again. We have gold and silver in the red as well. Gold in the red by 280 at 13.1130, and silver in the red as well, but well above that $17 level, down 8 cents at 17.42. So Dennis, were you a buyer of TEVA under $14?
Wish I would have been. You know what? It's funny. I coincidentally just had TEVA on my screen because it was trading up in the pre-market, and TEVA is trading overseas, so it's already active overseas. And I had it on my screen just, in my montage window, so that's in my level 2 quotes. And I just looked over at it, and I just watched it just go all the way down to 1381, it went in 2 seconds. So it went zoom, just like really fast. I was like, whoa, what's going on? I went and checked the news feed. I looked back at my TEVA screen, and it's already trading back at 1560 and actively trading at 1560. So obviously your high frequency market makers are in there making a market. Anybody who was sitting out there low just got free money. That thing traded down 2 points. And what were you saying? You looked at the tables on 27,000 shares, Joel?
Yep, 27,000 shares. There's the 1-minute chart up there, so we know it.
Yeah, bring it up.
Yeah, 1-minute chart. I wish we had like a 30. I mean, it wasn't even a minute, right?
No, it went over 2 seconds. If it was a minute, I could have bought it. It went too fast. I was like, I just looked over at it, and it was there, and then it was gone. So, because I looked at it, and immediately when I see TEVA trading down like that, I'm like, oh, well, that's trading overseas. There's got to be some news. That was just somebody that went, oops. They hit the sell button on too many shares, not enough liquidity in the pre-market, and kaplooey, Joel. Somebody just threw away a ton of money. So you think about that. The low print, I saw 3,000 shares go down to 1381. Just on those 3,000 shares, because stock is now at 1579, so you basically say 2 points. They threw away $6,000 just on those 3,000 shares. That's not talking about the other 24 that were sold down as it swept out. The buck someone out at $14.40, $14.50, $14. Somebody just threw away probably like $30,000 to $40,000 on TEVA just on an oops fat finger. You got to watch those orders, and obviously some big trader in there put that sell order in there, and it will go off. And you saw the thing fall here, as you can see on the pre-market chart. It fell pretty quickly.
What about it? You think it's finally finding a bottom here? We had 1532 yesterday, and now it looks like the ranges are just starting to get a little bit tighter, not going down with the same pace you had. But man, I don't know. I mean, I was wrong on when I tried to make a wager on this stock before here, but 1532, that was the low from yesterday. Went off the board at 1546.
I'm just going to tweet it out here. So I'm just saying, here's a look at some of the prints from the TEVA flash crash this morning. So, because I just copied them there, and I'm going to add the file here right now. So if you're following me on Twitter, you will see this in a second. I'm trying to get it. And I'm live tweeting here for you folks. TEVA. Here we go. So I said, here's a look at some. I always double check my tweets for spelling. Here's a look at some of the prints from the TEVA flash crash from this morning. Tweeted. And you can go check it out here right now. It is live. There you go. So if you want to check it out, you can check it out on Twitter. I'm Triple D Trader, TRIPLED TRADER. So there it is, 1381, 3,001 shares trade at the low on ARCA. It swept out all the liquidity on all the exchanges. So there's just not that much, on the U.S. market. So when somebody has 27,000 at 7:30 in the morning, stock can fall $2. So anyways, that's kind of some excitement that nobody's talking about, but because nobody saw it, except I noticed it because it's on my screen.
All right.
Anyways,
So
we do have other news here, Joel, though, besides TEVA flash crash. Yeah, you know what? Disaster stock of the day here again. Well, maybe not the day, but there's going to be a disaster in the food stocks here again. Campbell's Soup destroyed this morning. Earnings not good. Guidance not good. Spencer, give us the details, and then we'll tell you about the tape.
Yep, like you said, Campbell's Soup going to drag down, I think, most of the food sector this morning. Let me get my exact numbers up. There we go. Got it for you. Q4 adjusted EPS, 52 cents versus a 55-cent estimate. Sales of 1.664 billion versus 1.69. So they missed a little bit on both. That's bad, but it's not the worst thing ever. The worst thing ever is the guidance. The guidance for fiscal year adjusted EPS coming in at $3.04 to $3.11. $3.19 was the estimate. Sales also are going to be down 2% to flat. Again, this is for the fiscal year.
Yeah, so ugly here. Stock has just continued to leak here. Not traded a lot of stock, only 6,000 shares, but it's offered down to 48. Nobody's jumping in there. I mean, when you see those numbers, you think, well, it's probably going to fall. It's already been out of favor here. They're missing. They're lower in guidance. I mean, there's all concerns, obviously, with Amazon coming in and possibly lowering prices, that margins might get squeezed even at companies like Campbell's and Kellogg's and General Mills. That's why they've all been getting sold off ahead of these numbers. Now you see the numbers come out bad for the current quarter. That's not good. Sentiment's already bad towards it. Wouldn't be surprised if this thing continues to leak a bit.
I mean, this
Campbell's Soup is CPB, Fuzzy.
Yeah, I got it up there, and we have a pre-market low of 47.75, and we are only a nickel off that. So that is not a good sign. Little perplexed on this one, Dennis. I mean, they got to sell the food, right? Someone has to make the food. I mean, is Amazon going to start making food too? I mean,
well, but they're saying though, Joel, yeah, but okay, yeah, they got to sell the food. But if they're going to start lowering prices, they're going to squeeze the food suppliers. So they're going to squeeze Campbell's Soup and Kellogg's margin. That's why they're hitting them. They're saying that their margins are going to get squeezed, and that could be true. You don't think Amazon can squeeze margins coming in?
I'm just trying to find a Amazon-proof stock, and I guess
these are not Amazon-proof. I completely disagree with you. If you're saying Campbell's is Amazon-proof,
I said I'm trying.
I think they might have been before they bought Whole Foods, but not now. So I'm scared on these. I mean, they have nice dividends. So let's just talk. Campbell Soup's like 2.93. They all have pretty nice dividends. Kellogg's is 3. GIS is over 3. But the problem is that the margins get squeezed. The multiples on these things aren't cheap. And, they're defensive stocks. They usually go up when the market underperforms. Well, right now they're just repricing. And they're repricing because Amazon is in the space. They're repricing because the earnings lately haven't been good. And they're also repricing because, the market's hot. And who wants to own a food stock giving you 3% when the market's going up all the time? So I think that's, a case against them. At a certain point in time, valuation will make them cheaper, but they're in a repricing right now. And I've learned the hard way when I try to buy the dip or call the actual bottom, I get hurt more than I make money.
I'm just going to stick with the pre-market low. 47.75 is the level of the day to keep an eye on. That coincides with your November 2015 low at 47.77. So I think any downside under that would be absolute gravy. Big move for a food stock, Dennis. You don't see a food stock move 5% down $2.38. That doesn't mean that it can't go a lot lower, but just looking at that November 2015 low, that would be a reference point in today's session.
But they've hit this for 4 or 5 straight days since we know Whole Foods, and especially in the last couple of days since
Wow.
Amazon lowered those prices of Whole Foods. So there's some fear out there in the sector already, and now you get bad numbers on top of it. I mean, that's just maybe you get that capitulation move here where everybody's washes out. But I want to see the thing put in a double bottom or something, or show me a green candle at least before I start coming in here and buying this, because this sector is completely out of favor right now.
Quick sympathy plays here. Stocks that will move.
A ton of them.
Yeah, a ton of them.
So Kellogg's, it's not traded here this morning yet. Campbell's Soup, CPB, or not Campbell's Soup is the stock. GIS is down 50 cents right now. That's your pure play. But I think Kellogg's too. Also, this Kraft Heinz. Full disclosure, I'm short some Kraft Heinz. You can just keep going even if you want to go farther, and you wonder if like Coke, Pepsi sometimes, these are not direct plays now. The direct ones are Kellogg's and GIS. Those are the 2 direct ones, I would say.
What about Mondelez? Are they?
Yeah, Mondelez falls in there too, for sure. And full disclosure, I got some short on Mondelez too.
Oh, that went down to 40.39. Now we backed up. What is the Kraft Heinz symbol?
KHC. You still type in because your legacy KRFT, because that was the old one. Now it's KHC.
No, I actually
King Hotel Charlie.
I typed in HNZ.
Holy cow, Joel, you are really old. You're taking us back to a decade ago, HNZ. Yeah, and then Kraft bought, so then obviously they got taken off the board. KRFT merged with Heinz, and then Buffett was involved. Now they're back. KHC, publicly traded.
Now that really came down here. I was going to say, I thought that stock was holding up. I didn't realize it went to 97.77. 81 has been the current low of the move. That's your 2-day low. So if you're trading it, and for new listeners, sympathy plays are just simply stocks in the sector that are going to be affected by news and the main dog, and that's going to be Campbell's Soup with a bad report.
Tyson Foods, you can think also, which is Black UK is saying, yeah, I'd throw it in there. It's not as direct. Like when you think Campbell's, I automatically go to Kellogg's and GIS. Those are the 2 I think about. But yeah, you want to start reaching a little bit. It's a pretty ugly report. There could be some pressure, and it's something like a Conagra, even CAG. So CAG, they make food. They make food. Cisco, you could think SYY. They make food. You never know. So now we're reaching a little bit with those ones.
Right.
So stick with your GISs and your Kellogg's. Those are more direct sympathy plays.
And then John Dodson in the chat actually asking if anyone saw the huge fall in Mondelez yesterday, and if after Buffett said that Heinz would not buy them. That was on CNBC. That was interesting.
I mean, that was speculated for a while, but the stock really hasn't been trading up on that because it was, trading up on those rumors a while ago. It's kind of given that back. So yeah, we sold off $1 on that, but I don't think anybody's in Mondelez thinking that they were getting bought at this point in time. That kind of that rumor's kind of sailed. It wasn't like it was up $5 that this is going to get bought, and all of a sudden it's not getting bought. I mean, I think everybody kind of knew this wasn't getting bought.
All right, 40.39 Mondelez hit yesterday. Yeah, I wouldn't be hitting that stock on that. I really didn't think that was something in play. 40.39, but bounced back up. So maybe this one got tagged a little bit yesterday and won't have as much fallout as some of these other food stocks.
Black UK saying in the chat, maybe I should get out of my Costco long position. I don't know if you're worried about the Costco because of the Campbell's. Sometimes it can have effect on it, if you're really reaching into a Costco. I don't think so here, though. And the other thing is Costco's other news here this morning. Costco had same-store sales come out. Spencer, give us those details.
Up 7.3% in August. Net sales were $9.8 billion.
This company makes money. This company sells product. That is unbelievable same-store sales. If we didn't have the Amazon looming, this would be up a lot more on these numbers. But because they're still worried not about current earnings, they're worried about future earnings here with Amazon coming in. That is why you're not seeing that much of a rally on these numbers. And that being said, I don't know if I'm jumping in here and buying it either, because again, the market is not worried about the current quarter. They're worried about future quarters with Amazon. That is why the stock is no longer at $180 and is now at 154, 156 this morning. I think you got a lot of overhead supply still here. You know, you could even talk a 50% retracement of the move that we just had, which was from 160.66 down to 150.06. Call that, 11 points. We're trading up here about, $6 up. You're just over the 50% from, that recent move. I think there's still sellers up here. So we don't give investment advice on it, but I'm not coming in here and buying Costco just because, again, sentiment towards the sector is just too weak.
Keep an eye on wherever the pre-market high ends up. As of right now, the pre-market high, we're just trading a few cents off it. 146.41 is your last print. Your pre-market high, 156.60. You're getting into just a vacuum area here, Dennis, when that Costco news came up. But man, if you were like sitting tight and you were saying, wow, what was the low when they knocked it down in July? That was 150 even, right on the nose. And then you had a
bounce right off it.
Then you had a 150.11 low. Well, the second day after the latest, you got down to 150.06, and then you got the nice bounce. So I would be trying to hold on to that 150 level. You think they might get it down there, shake everybody out, go down to 148, 149.5 or something like that and bounce back up. But right now, air up to 160. There's really not much else you could say. You see that big red candle on the chart. And, also did a similar move. I know I'm jumping around here, but when Kroger got hit, it didn't quite get to the low of the move, 20.46. It got down to 21 even. But yeah, this sector is in shambles here, and you just got to be careful. A lot of overhead supply on these rallies.
A lot of people underwater. There's some buy the dippers in here, and at a certain point in time, I'm going to be one of the buy the dippers in my investment account on stocks like Costco, because I do think there's valuation. I talked before about Costco wanting to get the 145. Now we put in a hard bottom at 150, so you can say I like the 150 level a little bit better. Technically, it looks pretty good. Again, we still haven't seen all of the fallout, I think, here from this Amazon stuff, though. So I still think there's still some weakness ahead for Costco. That's why I'm not jumping in here today at 156.
Yep, up on the day.
A lot of other earnings here to talk about. Let's go over to Dollar General. They reported earnings here this morning. They are trading down. We saw a DLTR report last week, and they were pretty good. Dollar General, not as good. Spencer, details.
The Q2 adjusted EPS of $1.10 that beat by a penny. Sales of $5.83 billion versus $5.8 billion, so slight beat as well. Comps up 2.6%. They're also raising the low end of their EPS outlook for the fiscal year. Comps growth are toward the upper end of the previously issued range, which was slightly positive to about 2%. Let me tell you, I was down in Myrtle Beach last weekend, and I saw a lot of Dollar Generals. I saw like
4. They're in all the small towns.
I saw like 4. And I was they're everywhere.
They're in all the small towns. When you go through like a little country run there, even in Michigan, you go through. Remember, Joel, when we were like going down in Notre Dame, and you go to every little town, and they got like a Dollar General in like every little town.
We were saying they should merge, and I think a couple.
There was too many. Yeah, there used to be like a Dollar General and Family Dollar in every little town. Now, because they're all merged up, now there's just a Dollar General in every town. But man, there's a lot of those in the small little towns. I mean, that's your major grocery store in all these little towns. It's usually a Dollar General, or usually a Dollar General. Anyways, Dollar General here is trading down, so not nearly as good as Dollar Tree last week. 4% trade down the pre-market. You got some levels for us there,
Well,
Joel?
73.01 is your pre-market low, and that's kind of in no man's land. The closest low, no, not really. That coincides with your July 26 low, 72.92. But this area above this, I would have thought that maybe it would have bounced because you had a couple lows ahead of that. In the 73 handle between 73.37 and 75. Actually, you had 4 lows in a row. So it is opening into support. If they can't hold that initial support and you really want to buy this thing on the cheap, get your bid perhaps out under $72. You had 2 lows, 71.55 and 71.86. That was not too long ago. That was a month ago, July 25th and 26. So couple levels there. These stocks are wild though, aren't they, Dennis? These dollar stocks.
They can be on earnings. they can be on earnings, and that's a consideration. I've seen Dollar General, Dollar Tree both move $6-7 on earnings reports. So just because you think, oh, Dollar General's down 3, how bad can it get? They can get bad sometimes. So it's all about sentiment. And, you can analyze the numbers and say they're not that bad, but I'll tell you, the market sometimes just doesn't care. And it sometimes just doesn't listen that much to fundamentals. And sometimes, when the ball gets going in one direction, you'll just find sellers and there's not a lot of buyers. So that's the problem with this market. When the momentum is going one direction, it's going against you. It's awful. When it's going with you, it's awesome. It was going with me yesterday in Gilead. It felt pretty awesome there too, Joel. Blast off into orbit. Holy cow. Like, I don't even know what to do with my GILD position here now. I'm looking at it. That was a ridiculous move. Normally I would sell into that, but I'm a fan of the 2-day move. I don't know. We're getting a little follow through here again this morning. I feel like this is overdone here now. We knew, we talked about it a long time. They wanted some more growth from Gilead. They're going to get it with Kite. They're going to get some, obviously getting a company that's got a great potential drug out there. That's what the market wanted. And Gilead is getting a pop because of that. I still own my Gilead shares. I'm just looking, it's just so much so fast. I mean, here we were 2 months ago, $64. Now it's $81. Now I'm in the green. I was actually red in this a long time, my investment portfolio, but I don't know. I've been sticking with it for a while. I've had it a long time. I probably stick with it. But if I had it for a trade, I think I'd lighten up.
And I attributed this the street, evaluating the deal and looking at it. Now we did have some drug.
I think it was all the deal.
Yeah.
They finally just, they got a little pop the first day, and then they're analyzing it. You had some analyst commentary. I think they just, then the ball's just going again, momentum, and it took off. I mean, look at that chart. Look at the intraday chart. From 70, just bring it up, Joel. From the open, when it opened down around 75, 73 yesterday, it went straight up to 78, paused for about 20 minutes, and then went straight up to 80. I mean, that is the cleanest line going straight up. Like, if you were short that thing off the hop, you just got crushed, annihilated, destroyed. Because this is Gilead. Gilead usually moves, 50 cents or $1 on a lot of days. Well, it's straight up $5 in an hour and a half. On really no news. It's still just digesting the news of the merger from 3 days ago. But that's incredible. You catch a lot of people short.
8207. That was a high that you had back in September. So there's a potential target for you. Dennis, you and I were Skyping about this. And I said, you held it on the way down now. Perhaps you got to hold it on the way up as well. So
I think I hold it until at least you get like a red candle or something, because these things, it's got the momentum on my side right now. I used to always say sell when you can, not when you have to, but sometimes in this market, things go so dang crazy. Wait for at least a red bar, wait for it to start down ticking a bit. I mean, the things do turn eventually. Like, look at Juno. So, Juno was just a monster. I mean, it just got ridiculous yesterday. In the after hours from the previous night, it got up to over 46. It was up to 44 yesterday. And then, they took some wind out of the sails. And then, the momentum broke and, started coming down. And obviously in the afternoon, it ended up falling over 10% from where it was. Still way up from where it was, though. So that's just a little slight correction when you look at the, on the intraday chart there. But wow. Juno, when the momentum does turn, it can come out pretty quick. And you'll see a good fall here in Gilead eventually too. But it hasn't stopped going up yet. So I'm going to wait till it stops going up at least.
Good number to keep an eye on. I like to stress this. I've talked about it before. You get a high 2 days ago at 44.60, right? So you can think, oh, maybe I want to try and get out there. But I think a better level is the close, and that close was 43.81. That's where people are marked on their sheets that held the stock in the 20 handle only a few days ago. You did get 40 cents above it. You opened up at 44.01. You went to 44.25. So if you're trying to sell 44.60, it doesn't get there. Takes out that closing price, 43.81, just turns red on you. That's a good indication. The low from yesterday, 39.84, but I don't even know. I mean, you got a big gap to fill, big red candle. People, though, still sitting on a lot of profits, so there could be still more sellers there looking in Juno.
Egg on my face from dry ships will tell you that right now. I actually made money with it yesterday because I had it long and it opened up. It opened up 20 cents yesterday. I sold out of it. But after hours here, there's not much you can do. When I always say when technicals take a complete backseat when you have fundamental information comes out. Dry ships last night after hours gets a subpoena from the SEC. I don't care what the chart looks like. I don't care anything. That's going to knock the stock down. So, this long-term dog continues to remain a dog. I got bullish for a day or a couple of days, actually, and I went up 15% on my first call. Well, obviously got destroyed there yesterday because I was saying I still liked it around this $3 level. Now it's broken. I mean, I said the out was 285. This thing's at 243. It was kind of hard to get that out last night, though, because it just collapsed when that news came out of the subpoena.
Yeah, and I mean, what took so long? I mean, we kept on saying, wow, how can they keep doing these reverse splits? I think we might even made a few phone calls, a few inquiries into it. Nothing. And
I mean, it's the SEC should have been on this year.
Exactly. There we go.
Yeah. Just the timing horrible, because I've been bearish dry ships on this show for 2 years straight, making money on all those calls. And obviously now, I get bullish for a couple of days. I was okay on the first day, and then the second day, some bad news comes out. Serves me right. Never get bullish dry ships. It's just an eternal dog.
The subpoenas specifically were related to offerings made between June 2016 and July of this year. Also, did you see their earnings report? I've never seen an EPS quite like this before. Q2 EPS of a $37.12 loss.
$37 they lost. The thing's $3 a share. It's just
$37 a share.
I can't even I'm never ever new rule, never ever get bullish dry ships for whatever reason, even if the chart looks okay. Even if it looks okay, new rule, never ever get bullish dry ships, because it just is a disaster always. It might look good for a day or two, but it might get these little pops every once in a while. But long term, it just seems to always go down. I mean, the all-time high is like $1 billion or whatever it is now, because they've done so many reverse splits. Just absolutely ridiculous.
We might need to ban it from the show. We probably will when it goes off the board.
I think we should. Maybe. So, egg on my face for trying to get bullish a stupid stock like dry ships, because, obviously we know, long term, this company is just a disaster, and bad news came out all over the place on it yesterday. So bad companies are prone. You have bad stocks and you have bad companies. I would say it's a bad company, not even just a bad stock. And bad companies are prone to disasters like last night with the subpoena coming out. I'm glad I didn't own any shares, so I just feel bad if anybody bought the thing. But, because, I make a lot of good calls on the show. I'm not going to get them all right all the time, but I said I like the chart at $3, and obviously it's down 244 right now. So
how about
that happens. Can't get them all right.
How about that 275 offering price of 36?
Yeah, who's going on that one? Yeah, rights offering? Who's exercising those rights now? Nobody. I think I'll pass on those rights. The rights to buy it at 275.
It's going to be changed to 27.5 cents. But
they'll probably lower it, and then just print more, and we'll just do more reverse splits. Sounds like the SEC is going to try to stop these reverse splits. So that's one thing to go. And obviously think about Tops. They do the same thing. TOPS. Similar company. It's actually trading up 3 cents in the pre-market. But, if you look at the long-term chart on Tops too, it's the same thing. Its all-time high is like $80,000 or something. It's at 55 cents. So,
all right, in the chat.
These shippers, man, these small shippers that are doing this death spiral financing, it's just, tough.
Can we do a stock for Down War Dog here? KTOS. Do we have any news on that one, Spencer?
No, not that I'm seeing this morning.
Well, let's see here. Not seeing much in the pre-market chart. Little dip. I'll just do a quick technical for it. Nice 2-day move here. 1340 got hit a little bit. I'm not sure if that went down on any volume. Went down to 1275. Right back at 1330. For this one, Downward Dog, you just want to see it take out that 1340 high and just keep on going. No pause. No hesitation. Also, the close 1333. Keep an eye on that. This is defense. Oh, look at that. Defense and Security Solution Company. So that's been a hot sector. So right as long as you can. Weeklies look good. Monthlies look good as well. 1556 if you really want to target. Also, a couple tops just under $15. That was back in October.
Ace is saying that I was bearish AMD. I don't know. I'm long AMD, so I don't know, if that was somebody else on the show that was bearish yesterday. I don't remember being bearish AMD. I was saying I've kind of liked it down here at this 12 because it's been holding for a while here. I'm long it right now. I think it's set up for the 2-day move. I think it could go to 13. So I'm not sure what it was said on the audio yesterday. Maybe I said something bearish about it or was interpreted bearish a couple days ago. I'm not sure. I am a day trader, so I do change my opinion a lot. But I'll tell you right now, I'm long AMD, and I think it could go to 13.
Investment or for trade?
No, day trade. It's a overnight trade, 2-day move trade. I like the 2-day moves, and I give props to my buddy Jamie there pointing this one out. He was like saying, because he listens to the show and at Bright there, and he obviously does some 2-day moves, and he's got some scanners for it too. And he's like, AMD looks like a good setup. I was like, you're right. I bought AMD yesterday because of Jamie. Thank you, Jamie. And I'm actually up a little bit on this morning. It's trading up a dime here, and I think there's room to 13.
All right. New person in the chat wants to know if Triple D is still long Triple D.
Yeah, I am. I obviously, and this is one here. It starts to look a little more interesting here. It's doing a little rounding bottom. I have it in my longer term portfolio. I bought it at 15. It ran to 22 in like 2 weeks, up 50% in 2 weeks. I should have sold it all. I sold half. I should have sold it all, obviously, and now it's down below where I bought it there. So I'm kicking around here. I'm still holding on to it. I think, I don't know. I'm torn on this one. It was a speculative buy when I put it in there. I made some nice money on it. I just wish I would have sold the whole thing and been out, and then I could have been reloading here at 12.89. I'm not adding to it here right now, but it's rounding here right now. It looks a little bit better than it did, obviously a week ago.
It's trying. Maybe get over $13 here. I see the high is just kind of creeping up, but we haven't been over 13 in quite a while. I see a 12.99 high. So I think I get over 13, not too far from that. Little room on the upside here, kind of, as Dennis mentioned, a rounding bottom as well. We got a few more minutes before we go to our guest. I see a few more stocks in here from Dr. J, and we'll cover those and then maybe take a look at imbalances. TD, nice looking chart there.
Good earnings.
Yeah. What do we have on TD?
Yep. $1.53, $1.51 Canadian dollars versus $1.21 estimate, or sorry, $1.27 in the same quarter last year. So $1.51 versus $1.27 in the same quarter last year. Sales of about 9.2 billion Canadian dollars.
Joel, what do you think of the charts, Joel?
52. That's your pre-market high. As long as it holds 52, I like it. You had a 3-day high right at 52. So it holds above there. Like it. Kind of in no man's land here, except for, let's see, TD. I do see 2 highs here in TD. Let me see if I can find those. Oh, right here. I take back that statement. 52.5 and 52.61. Those were consecutive days highs back in March. It's also, I got one chart printing up the 53, but keep an eye on this 52, 55 area. That splits the highs from March 7th and March 8th. And then one more here. I saw this one. It was Micron. That's been on a rally lately, huh, Dennis? Did we lose Dennis?
Sorry, I was on mute. Yeah.
That's
Micron here, MU. Let's talk the chart. The old mute trick, and Joel does it usually every show. I haven't done it in a couple of weeks. So Micron here, it's getting back up to all that resistance, though, between 32 and 33. It's tough up there.
Yeah, there's multiple highs here, 35 cents away from the $32 area. I see highs 32, 35, and then they steadily come down. So see how it reacts at $32. Has come back from under 28. So 32, you have to respect all those highs, and those were back in the middle of July. We got a minute to our first guest here. Dennis, S&P's up 475. How the imbalance is looking?
Let's go take a look here. Hot off the press, it came out at 8:30. Baba, your typical Alibaba buy and balance, 48,000 shares. They're back to buy Baba here every morning. Snap, we did have some analyst commentary here. 37,000 to sell in Snap. It might be because, was it Wedbush, Spencer? Somebody put a neutral on it, but the price target was like $12. Spencer?
Yeah, I'm here. I'm here. It was Wedbush. It was coverage on Snap with a neutral and $12. So you are correct.
I'm still going to preach this $15 area. Stunk its head over it a couple different occasions here over the last 5 or 6 sessions. Only posted one close above it. 1531 are the high of the move. So I'm still looking at this resistance. If it takes that out, we certainly got some room on the upside. But really, you got to clean up that seller at the 15 a quarter, 1530 area. All right, who's our guest today, Spencer?
Arthur Hill. He's a senior technical analyst at stockcharts.com. He's got some good analysis. He's got over 10 years experience as a technical analyst, trader, and educator. So we'll be right back with Arthur Hill.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel. And we have Arthur Hill on the line of stockcharts.com. Arthur, how you doing today?
Very good. Good to be with you guys. Thanks.
Yeah, so Dennis and I do our technicals, but you are definitely accomplished at what you do, and you sent us over some great charts here. A lot of things to talk about, but I kind of like your top headline. Meet the new boss, same as the old boss. You're talking tech ETFs. Which one would you like me to pull up on the screen? XLK?
Yeah, XLK would be fine because it is the new boss, old boss.
All right. So what do you do here? 58.52. I think this is like an all-time high, right? I'm sure it is. Let's see. Back in the tech bubble, it went 65.44. So talk about when stocks. I'm showing here a monthly chart. I mean, what do you look for? What do you look for in targets and things like this? Do you do average daily ranges? Do you do Fibonacci extensions? How do you find resistance in stocks like this? ETFs?
Well, when there's no overhead resistance, I'm a trend follower kind of guy. So I'm basically looking for pullbacks, correction within the trend. And I think we got one over the past 5 weeks or so when XLK was flat. And now it's hard to pick a target. A short-term target, you could do a measured move. You have the July low in the early part of July going up to that early August high or late July high is going from about 54 to 58. So that's about 4 points. And you could project that up from 58 to get you to around 62.
All right, you identified some flag breakouts in cloud and internet ETFs here. I see. I'll pull up IGV on the screen. Tell us about your setup getting into it and where your potential target is.
Okay, well, with the internet ETF, the technology ETFs that I've been watching, they had what we would call bullish flag patterns forming. And the interesting thing about IGV was it broke out on August 14 with a gap surge, and it broke out ahead of the other technology ETFs like Sky Computing or the Internet ETF FDN or the semiconductor ETFs. So it's a leader. and it's hitting a 52-week high today. So, with the bull flag, you would kind of look at the previous move and project that up from the breakout again. So, call it, say, 133 up to around 143, and your breakout's around 40. So that'll give you about a 150 target for this flag breakout.
All right, networking and cybersecurity join the surge. We can look at IGN, but what do you do with a laggard like Hack? Let's talk about that one.
Yeah, that's kind of the double-edged sword because it's lagging, and so that is a negative. But if I just step back and I look at the chart, you can see we had a 52-week high in early June. And we've pulled back. The pullback into August retraced about 50% of the advance from November to that June high. So I'm working under the assumption that the longer term trend is up. And this is a normal pullback, even though it's lagging. It's a normal pullback within an uptrend because it retraced 50%. We usually look for about 2 steps forward, 1 step back. And it's kind of come back into the support from the March, April lows, and it's getting a nice bounce. And so I think this is kind of the early signal that we're going to break out to the upside above those July highs and move to new highs in Hack.
Yeah, I see those couple highs just above 29.50. Let's go into some of the top components in here. And I think one reports after the close today. So let's start with that. PANW had a great report and then just kind of leaked after that, not going back to fill the gap. I mean, with stocks like this, man, I'm being long and I'm thinking it could easily come down and fill the gap at 120. Tell us how you approach Palo Alto Networks.
Well, the way I'd approach it is I think there's a huge island reversal that has taken over the chart. You had that huge gap down in February, and then you traded flat into May, and then you had a big gap up in June. And together, those two gaps down and up form this island. And anybody that's short down there is trapped on that island, so to speak, with losses. And so this gap zone is kind of turning into support. And you can see the June low and the early August low marking support around 127-ish. So, I would expect a continuation higher here.
All right. Also, FireEye, FEYE. Let's take a look at that one.
Yeah, FireEye, it's, these are the two that kind of took the hits earlier. And FireEye has sprung back to life. Its 50-day EMA has moved above the 200-day EMA, and it's back above the 200-day EMA with the bounce last week. And again, it has a big gap in early May and a resistance breakout from those January highs. And that's kind of a support zone. And, I hate to give like a line, say support is at 14.35. FireEye is a bit of a volatile stock, so I like to give it a zone. And this is a zone I would look for FireEye to firm after this big move up from March to May. It's kind of, chopped around here, but it's firming in an area that I would expect it to move higher from.
All right, let's talk about some semiconductor stocks. First, let's talk about the SOX index, SOXX. I'm sure that's not quite back at all-time high, which is 155.95. Finding resistance here at 150. Have a target on the upside in the Philly semiconductor ETFs.
Okay, well, you had that huge bearish engulfing pattern that formed to mark that high at 155 on June 9th. But it's since been just trading flat, and it's a big symmetrical triangle. And, classic technical analysis would tell us we would take the height of that pattern and then apply it to the breakout. So, your height's extending from around 156 to 138 roughly, and you can apply that to the breakout area we're getting around 150 here.
Okay, some stocks in the chat from Downward Dog. I don't know if you have your charts up available, but BL, any take on that issue?
BL, sure. I can definitely pull up the chart and take a look. Black line. So it looks like it had an IPO there in October and was kind of just marching forward with not much happening and had this gap down. So, we got this tight consolidation, and I think you just have to look for the resolution of this consolidation to pick your next directional move. If you break below 28 and a half, you got the second shoe dropping. And if you can get above 31, then you've had a successful support zone established and ready to move higher.
All right. Another stock in the chat, NEO. NEO.
Sorry, what was that symbol again?
Nancy Edward Oscar. NEO.
Nancy Edward Oscar. Gotcha.
Yeah, this one has had a nice bump. That name like that makes it sound like it's a biotech stock. I see 993 is the high of the move. You've already had your 2-day move, actually 3 days. But that 993 area, to me, you also had a high in November up near $10. So that would be a target on the upside. Any take on NEO?
Yeah, it's, and biotechs in general are doing quite well with the XBI and the IBB making nice moves over the last couple of weeks. Neogenomics, you're right from the name. I would assume that this is going to be one of the more riskier plays in biotechs, but it's clearly, made a surge from, 7 to 9-ish and consolidated after this surge. It's been a bit of a volatile consolidation, but I would view the action from, say, the middle of July until the latter part of August here as like a pennant. And we surged yesterday. It looks like we're breaking that pennant and poised to break out to new highs. And if you close below 9, then you've negated that breakout move that we just saw now.
Before we talk about the transports here, the surging to a wedge line, tell us, why you're not a big fan of the Dow Industrials, Transports, and Utilities.
Well, it's just a personal preference. The Dow is as good as any index for following large caps, but they're price-weighted averages. And so that means the stocks with the highest prices are going to account for the highest weightings in the average. So in the Dow, you have, say, Goldman Sachs trading around 220 and Boeing trading up around 240. They're the heavyweights. They're probably together around 15%, I think. And then in the transports, you've got FedEx being the top dog. And I look at the transports, and the top 6 stocks account for around 50%, and the top 10 stocks account for, say, 68%. And there's no airline stocks in the top 10. The 5 airline stocks in the Dow Transports account for about 20%. So they're not a big influence. They're an influence, of course, and they do move in unison. But, you really got to be watching FedEx and UPS and the railroads when it comes to the Dow Transports, because they're the big drivers because they have the highest prices.
All right, so let's talk about the iShares Transportation Average ETF here. Found some nice support under 164. Trading yesterday had a nice update. Does this have enough gas to get to 170?
I would say yes, because again, I'm looking at the overall trend, and I see, higher highs coming in December and January, and a 52-week high in June. And we're holding above those March, April, May lows now. And we got a rising 200-day moving average that we've just moved back above. And the wedge is a typical corrective pattern within a bigger uptrend. So we've got this initial 4-day thrust to suggest that we're about to have a bullish resolution to this wedge. And I think, you clear 170 and that opens the door for new highs. And if you look at the biggest component, FedEx, it's got a nice breakout working over the last 4 days, 5 days with that surge that it's had above 211. So the leader is doing just fine.
And I see that. And coming up to the 215 area, tested that a few times in July. actually 4 times in July. So we'll see if it can clear the 215 hurdle. And then we got to talk about, if you're talking about FedEx, you got to talk about UPS. Give us your take on UPS.
Yeah, UPS is it's a bit of a frustrating stock to play, I find, because I mean, if you look at a 1-year chart, you know, in November it goes from like 103 to 118 in 5 weeks, and then it goes from 118 down to 101 in late January, kind of, you know, stalls around for a few months, and now it's up over 10% from its May low. So it's become one of the leaders. It's not one of my favorite stocks to trade from a technical point of view. It's kind of like, I don't know, Abercrombie and Fitch, you know, it's kind of all over the place. But, you know, I take that leadership role it's got over the last 3 to 4 months as a positive for the broader market, because it is a global shipper. And I think that's positive. So I would be bullish on UPS, but I'm not sure how to play it.
You brought up a lot of good looking charts here, so I can kind of get a feel for your trading styles. I mean, so, but like when things are getting killed, I mean, do you have anything that is really taking a hit lately that, you know, might be trying to find the bottom? I mean, TEVA, that had the flash crash today. Do you have anything, or do you just kind of stay away from ugly charts like this and try and get them on the rise?
Well, I do stay away from ugly charts. You know, there's maybe Akamai is one that might be coming across my radar. And that's because I've heard a few interviews with some people I respect that look at the long term, and it might be one to watch for a bottom fishing opportunity.
Okay. All right. We've been on the line with Arthur Hill of stockcharts.com. He's got a lot of good content here. He's certified market technician, senior technical analyst. Thanks a lot, Arthur. We'll talk to you again soon.
Thanks very much. See you later.
All right. S&P futures trading up 575 here at 2461.50. Pre-market high 65 even. 68.5 is your 10-day Globex high. Spencer, do we have anything here in ratings land?
I mean, we got a couple things. Nothing. You know, Dennis said yesterday, and he's right. It's a pretty quiet time of year for ratings. He did mention the comments that we got from Snap. We got Goldman today initiating a couple of Chinese stocks, YY and Momo, both at a buy. What else did I see going through the list here? We had nothing really jumping out to me as far as upgrades or downgrades are concerned. The Goldman note on YY and Momo was the biggest one that I saw. There was one on, I believe it was it Hasbro, where KeyBank is sort of reinstating / upgrading it. They stopped coverage at a neutral, and now they're resuming coverage at an overweight. But that's really it, though. Not a whole lot going on. I don't know if Dennis, if you saw anything else.
There was a couple here, but LGIH. Did you mention that one from Wedbush?
No, I didn't.
Yeah, that got an upgrade here. It's bid up in the pre-market. They're all small though right now, and this is just a time of year where the analysts are on vacation. There's not a lot going on, so you know there's not some major commentary. When you come back in September, that's when everybody gets back their desks. That's when you start seeing analysts crunching the numbers on the companies and putting out the reports. So always gets busier from ratings land in next month. So, and we are at the end of the month here, Joel. It is August. We are at the end of the month. And, you know, that often means some volatility towards the end of the day and on the close here. So thoughts here as we approach the end of the month, we're not far off the all-time highs here on the S&P. We've had a pretty good 2-day move. You know, Trump, you were saying, you know, pretty much put in the bottom with his tweet there yesterday when the market pulled back, when he tweeted the negative commentary on the markets, and it rallied ever since then.
All right. I mean, I just could give you some levels. I mean, you know, that's what I like to do. 2468.50. That's your 10-day high, and then you have a bunch of highs up in the upper or in the middle 2470 handle from 2473.25 to 2474.5. A lot of numbers: 11, 12, 15, and 16-day highs. That's what I have in front of me. Anything change in imbalances?
They're all pretty small here yet. We're still half an hour before the open. We're on a day where we got a little rally going. There is the food stocks look like they're going to be weak. I mean, Campbell's continues to leak here. We're now 46.55. So we've fallen another, 3-4% here just since we were talking about it at 48. And if you've got sympathy moves here, GIS is now down 2% here. It's down $1. It looks like it's going to be a mess. Kellogg's is traded down for the first time. It's down 1% here right now. So it does look like this is going to spill into some of the other food stocks here as well. Mondelez is starting to get some offers for them. And I'm full disclosure, I do have a short position on in that one. So it looks like a little bit of a food stock disaster. Costco's still hanging on here. I'm just concerned that, food, they're obviously a big food distributor here. I'm also concerned long term. I'm not sure Costco's going to hold on to these gains here today. I just got a bad feeling about it. But, it's just a feeling. Sometimes you're wrong, like I was with dry ships yesterday. But Costco here, I've just got a feeling this could start to leak.
A couple headlines I wanted to bring to your attention from the Benzinga Pro. One of them is food related, one's not. The first is Campbell's. So the conference call is going on right now. The CEO, Denise Morrison, actually warned of added headwinds in soup sales as they weren't able to come to a deal for a promotional program with a large customer. That's a headline from Reuters that we have in Benzinga Pro. Also, Barnes & Noble actually indicated up 35 cents or around there right now. It's a report from Bloomberg that they're working with Guggenheim. So maybe.
Are they working with Guggenheim on like a potential sale?
That's what that would mean to me.
Okay, so yeah, BKS only traded 1,200 shares. It's offered 765, bid 740, so it is up 5% here just on that one tick. Sometimes I can get a pop. We've heard this stuff from Barnes & Noble before, so take it with a grain of salt because this has been rumored lots of times before. Remember when the rumors back in 2014, 2015, This got up over $29 on speculation that it might get bought, and then those rumors got squashed and it got cut in half almost in the course of the next couple of weeks. So, we have seen, these rumors before with Barnes & Noble. Why? I don't understand why somebody wants to buy Barnes & Noble. Like, I'm just trying to figure it out because, it's a bookstore.
It's a coffee play.
Obviously it was the first thing that was attacked by Amazon way back in 2000 when Amazon, remember, originally was the online bookstore. So they've been Amazon to death. I don't know. Like, why do you want to own Barnes & Noble?
Maybe it's a coffee play.
Is that what it is?
I'm kidding. No, I'm kidding.
Like
I'm kidding.
Go in there, check it. No, there is people because the Starbucks are linked in those Barnes and Nobles and stuff. Are they not?
Yeah, yes, they are.
There is an argument, I guess, made there that hey, we like to go and drink our Starbucks coffee and read our Barnes and Noble books at the Barnes and Noble, but still, I don't know, man. That's just it seems like an old school business. These big, huge bookstores there. It's huge expenses. I mean, that's the charts don't lie. Look at a monthly on that thing, and obviously it doesn't look pretty. And it's been Amazon to death.
Something I saw this morning actually that I wanted to highlight specifically with regards to Barnes and Noble. So textbook sales, right? Which has been a big driver or a big revenue source for them. The college bookseller unit sales in that fell 2.5%. That was led by an 8.5% drop, specifically in textbook sales. That's a big deal because textbook sales have increased, or textbook prices have increased at 3 times the rate of inflation for several decades now. So people are just wising up, looks like, these college kids, and they're not buying textbooks anymore, or they're buying cheaper used ones and not new $200 textbooks. So I don't know, something to keep in mind there. But the story is that they're being hurt, for everything, not just that. But it's not a new phenomenon.
I just want to make a quick note here as we see Campbell's Soup just get absolutely destroyed here, trading down in the pre-market. And just you see these levels like 46.32. And I know this is like a different stock, a different sector, Dennis, but did you see what this DY did off the open yesterday and what it did compared to in the pre-market? Did you check out any of that action? You had a pre-market low way down.
Crazy movement.
64.44. And then you have an open at $8 above that.
Conference call.
Okay.
So, and that's, we've talked about this before. There is money to be made by listening to those conference calls. If you can interpret, and obviously a lot of things that are said, aren't black and white. They're always going to make, when the CEOs are talking, they're always going to make everything usually make it sound, better than it is, except I guess when you're in the case of, who's the one that, just from, and now I'm having, I can't remember who reported that.
The one from yesterday?
Yeah.
Oh Man,
Best Buy.
Best Buy, yeah.
Yeah, Best Buy in the conference call, and they said some negative commentary that knocked your stock down. But usually the CEOs are going to make it sound a little bit better in the conference call than it is. But if you can read between the lines, you get a lot of information from those conference calls. And sometimes it's interpreted as good, sometimes it's bad, but it is market moving. And Dicom yesterday, I believe, said some stuff during the conference call that helped to obviously rally the stock down from 64 up to 76.
All right, 8:59, 30 seconds here. Spencer, you want to wrap up today's show?
I actually forgot to mention this off the top, but we do have another interview coming up right now. This is one that I recorded yesterday. So I've mentioned this on the show now for about a month, but the Benzinga FinTech Summit is September 28th in San Francisco. And ahead of that, we're going to be sort of profiling some of the companies that are going to be in attendance and sort of the cool stuff that they do. These are the people that will be speaking at the event in some form via exhibitor or a demo, or they'll be on a panel of some kind. So I want to air this interview right now that I did yesterday or 2 days ago. This is with Matt Amberson. He's the founder and CEO of a company called ORATS. They are an options analytics firm. I'm going to put their website up on the screen right now, and you'll be able to see. And then I'm going to air this interview with Matt Amberson. He's the founder and CEO of ORATS. Welcome back, everyone. We are joined now by Matt Amberson. Matt is the principal and founder of a company called ORATS. They're going to be at the Benzinga FinTech Summit on September 28th. Matt, thank you so much for joining us.
Nice to talk to you. Yeah, we're excited to go to the event.
So what exactly is, first of all, explain ORATS. What does ORATS mean?
Option Research and Technology Services, short is ORATS. And we're basically, as the name implies, provide option research, now mostly back testing and implementation tools and research for option traders, mostly now pensions and institutions and wealth managers. That's where we're seeing a lot of the growth. It used to be more of the trading firms, but now, like I said, we're getting more into what I like to call as options as a second language people. Those that might have penchants for picking stocks long or short and using options to overlay. So that's basically a explanation of my company in a nutshell.
So you're at this point providing your customers are mostly on the institutional side, but what exactly are you providing for them? Like, what kind of research?
So we'll provide volatility research. So basically, the options markets are millions of options changing prices, and we try to make sense of it and tell people what's going on. I mean, it's an important part of the economy to know how to value risk, and we try to say how much risk is in a company by talking about their volatility. There are interesting relationships between the options. So there might be, again, the way options work is there are many different expirations. It's almost can be thought of as an insurance contract where you're insuring and your deductibles are changing and how long you're going to own the option contract is changing. So we try to make sense of it. And we find that there's a lot of hidden information in those relationships. As a matter of fact, there's more liquidity in options than often is in the underlying stocks. So those actors in the market that may have some more information on stocks or ETFs often use options to present their opinion of what's going to happen. And we help see what that is and communicate that to our clients.
Do you have a background in options trading? Or are you
Yes.
Are you a trader on the side?
So my background, I was at Kellogg Graduate School in Chicago and went down to the floor after that of the SIBO and was successful down there and wrote some programs and was able to back traders on the floor. So I backed traders and ran a successful market making operation on the SIBO. And then we brought it upstairs, so to speak, traded from offices. And then we started selling our research. I could provide research to many different clients and provide leverage on my knowledge. And so we ended up, I got married, and we ended up not trading as much, and then moving more to the research side. And then we started back testing to prove out some of our proprietary calculations, such as forecasts and implied dividends and implied earnings moves and a bunch of other information like that. And now the back testing platform has taken a life of its own, and now it's probably one of our most popular products. People like to test out their trading strategies before they actually implement them, and we help them test out their strategies. And then we've come up with tools, HTML5 web-based tools, to make it easy for people to, one, produce strategies, profitable strategies, and two, to implement them.
So then how do you approach, I guess, from an option standpoint, how do you approach the market that we're in right now, right? Obviously, volatility is quite low. We've been in a pretty prolonged bull market now for most of the last decade. So how do you approach that, as an options trader, and how do you approach that for your, for your clients?
Yeah, from a data perspective, I mean, everyone thinks one thing or the other of the markets. It's too high, it's too low. We look at it, from a data perspective. And, a funny thing that we've found from doing a lot of back testing is somewhat counterintuitive, that when the market volatility is low and the implied volatility is low, the market often doesn't get it low enough. And what that means is there are two important volatilities that we measure. One is the actual volatility, or how much ETFs and stocks move, actually the stock price moves. That's, historical or statistical volatility. And the other important volatility measurement is implied volatility. And implied is the market's perception of what's going to happen in a particular stock, how much the stock's going to, or an ETF is going to move. And when that those two diverge, when the implied volatility diverges from the historical volatility, is when there are some opportunities for profit in the options market. Well, when the historical or statistical volatility is low, the implied volatility, we find, sometimes doesn't get low enough. So even though you're selling low, so to speak, there's often profit opportunities there. So that's what we're seeing, especially now. We've been saying that for a number of months. The interesting thing is, conversely, in very volatile markets, the implied volatility, or the market's perception of what's going to happen, doesn't get high enough. So even though people say, "Oh, it's so high, we have to sell volatility," well, that's often incorrect. Especially in our back testing, we see that the market can't find it in itself to get it high enough to match the realized volatility. So that's what we're seeing out there in the market now.
We're on with Matt Amberson. He's the founder and principal of ORATS, and I mentioned this at the top. Matt, you're going to be at the Benzinga FinTech Summit September 28th. What exactly are you guys going to be demoing there?
Yeah, we're going to talk about our backtesting platform, and how we make sense of the market, and how we take large amounts of information and make it palatable for backtesting. We think what separates ORATS from other firms is the fact that we have such expertise in trading that we can take the data that's out there, summarize it, get proprietary calculations, and find opportunities out there that others might not be able to. So that, in a very short amount of time that I'm able to present, that's what we're going to try to get across.
And ORATS is the name of the company. ORATS.com is where you can learn more about Matt's company, and bzsummit.com is where you can learn more about the Benzinga FinTech Summit. Matt, looking forward to your presentation. Looking forward to seeing you at the event. Thanks so much for joining us today.
Yeah, it's my pleasure, and I'm looking forward to it as well. We're going to have some of our biggest clients out there in the audience, so it's working out well. I'm going out to California, where I grew up, so looking forward to seeing you out there.
All right. Thanks a lot. All right. And that is our show today, folks. So thank you so much for listening. I want to once again mention that our show today was brought to you by Chaikin Analytics, winner of the 2017 Benzinga FinTech Award for Best Trading Idea Platform, Tool, or app. Mark Chaikin, he's the founder of that company. He's going to be hosting 2 webinars today, one at 4:15 and the other one at 8. The 4:15 one is a intro to options one. The 8 o'clock one is a more advanced options webinar. You can learn more about going to chaikinanalytics.com. It's CHAIKIN.com. I'm also posting the link in the chat to those webinars, so you can check that out when you get a chance. Have a good rest of your day, folks. That's it for us today. We'll be back with you on Friday for our last show of the week.